Hi, my name is Amy. Thank you very much for watching, and let's make some bad financial decisions together. This is for entertainment purposes only, so if you're entertained, please like and subscribe. I would really appreciate that. So today we're going to be comparing BLOX, BTCI, XBTY, and BCCC. And this is not every single Bitcoin high income ETF. I have done one with YieldMight before, so I will, if I remember I'll put a card here so you can see more comparisons with more Bitcoin ETFs, but there are a lot of them because Bitcoin's very volatile and a lot of people, they value this as an asset in their portfolio, and so if you can get a lot of income and a lot of price appreciation, then why not? So this is also tomorrow on the Pit, which is the Ambassador Kwan's Twitter space. I am going to be comparing these with probably the Income Architect and Max Convexity, but I don't know the exact. Actually, I think maybe the Income Architect has something going on. Whoever is the official guest, I will do it with whoever the official guest is. Anyways, the first category that we have is assets under management, and the clear winner here is BTCI. They have 600 million under assets, and it is only a 98 bips, as opposed to BLOX, which has 33 million under management and 1.03 bips, or XBTY, that they came out, XBTY came out a month before BLOX and BCC, but it has 66 million and they have a 0.99 bips. BCCC has not caught on as much with only 7.87 million and a 0.75 bips. I think here only BCCC has any kind of a worry about liquidity because it's under 10 million, but once it hits that 10 million mark, we should be able to buy fractional shares and it'll be fine. So BLOX and BCCC, they both pay weekly, and XBTY also pays weekly on a different day, and XBTY is not leveraged, but they sell puts on a leveraged ETF, so their underlying is BTX at the moment. BTCI is on spot Bitcoin, BLOX does crypto industry things, and BCCC, they also are Bitcoin. The Bitcoin is the underlying. And so I think BLOX is the only one whose objective, the first objective, is capital appreciation. All of the other ones, they are seeking income or current income. So I think, well, all of these also have way different strategies. Like BCCC, they only do a portion of their underlyings with a cover call strategy. So only a portion of the fund is doing that, which is why they can get a 36% yield. XBTY, they sell puts on a leverage ETF, which has a 99% distribution rate. Then BTCI is a pretty standard poor man's cover call, and it's based off of spot Bitcoin. And then BLOX, they own the underlying, and it's companies that are within the crypto industry, and they do credit call spreads. So I was looking at the total real returns because XBTY has only been here since May of this year, and BLOX and BCC have only been here since June of this year. So that's not really a lot of time to do comparison in different types of environments, because since May of this year, we've been on a pretty steady bull run. However, from June of this year to 8/27, so Wednesday of this week, for BLOX, you would have with an investment of $10,000, you would have $12,021, which is great. But then you have BCC, which is $10,912, BTCI with $10,455, and then XBTY with $10,708. I think the interesting thing about this is that BLOX has the most, and BTCI, they have the least total return. However, if we just go from August 18th until August 20, where we had a little bit of a pullback, BLOX, you would have $9,577. BCCC would be $9,791. BTCI is $9,836, and XBTY is $9,774. So BTCI in the downward market actually had more total return. So it basically inverted. So even XBTY did better than BLOX, and XBTY is based off of a leverage fund. So you would think that in the down market, it would go down pretty severely as opposed to BLOX. So I was expecting in a good bull market that BLOX would do better because it's companies related to Bitcoin, so it's not exactly Bitcoin. And then they do the call credit spread, which is good, and they only pay out the distribution rates like 5%. What I wasn't expecting was for basically everything to beat it during a downturn, even the leveraged thing. So I think that's interesting that in the good times, XBTY has a pretty good showing when you compare it to BCCC and BTCI. But in the down market, it is actually the second, well, I guess the third. So it's pretty much, it's not the best and it's not the worst, but it is leveraged, so there's that. So what does this mean for us and our strategy? I don't think there's any other time frame I really want to test with all four of these. And since BTCI is the only one that's older than May, there's really not really a point in trying to do more total returns. I think one of the other questions is, which of these would you have in your portfolio and like what percentage you would have? And for me, the answer is, well, I went with XBTY to be like 10% of my taxable brokerage account because it has a 99.89% distribution, and I personally need the income. But I think the real answer, something like what's in my Roth IRA, where I have a little bit of all of these ETFs, because there's not going to be one circumstance that one of these ETFs wins in every single scenario. These strategies are different enough that they have different strengths and weaknesses relative to the market. So I think that I like all of these pretty much exactly the same. I think that if I could only buy into one of them, though, I mean, I would personally do XBTY. I don't know if that is necessarily the best fund of these. Maybe it would be BLOX. But, okay, so why would I say BLOX is the best, but I would go with XBTY? I don't mind leveraged ETFs, even though this isn't leveraged, it's selling puts on leverage. And I like the higher distribution, and I think that it'll have a reasonable return. And I just like it. I like BLOX kind of like I like LFGY because it has crypto related companies. So if it's not exactly like a spot Bitcoin ETF. So, yeah, for me, I think the answer would be XBTY, and pair it maybe with something like BTCI. That way I'm getting more appreciation, but also more distribution so that I can survive being self-employed, which I was very productive today, not in terms of actually recording this video so that we would have it out on time, but I signed my operation agreement and I opened up a bank account and I applied for a credit card. And so tomorrow I can start, I need to make a series, and probably two of them, YieldMight and BFD, and get those separated so that I'm not commingling the funds and the liability is isolated. And then I also did something that you all might have mixed feelings about, but I have a $9,000 transfer from a credit card because there was a promotion for a 0% transfer for, I mean, it wasn't really all that long, but it was until June 2026. And I didn't have to, well, I could do an indirect transfer, which means I could pay $9,299.12 towards my personal loan. And so and it had a 3% penalty, but 3% is still less than 15%. So I figured if I can even get a portion of it down and, start really overpaying to get my personal loan paid off, then we're going to try to extend the time that I need in order to pay off my credit cards so that I can pay off this 15% personal loan so that I can then go back and do the credit cards, because the credit cards have much smaller minimum payments than the $1,000 a month personal loan. So I also paid the $5,000 to have my tenant break the lease, and I only have a couple more outstanding items for things I'm going to get charged with my condo, but it is scheduled for me to be at closing at it's at 11 a.m. on September 2nd, and I will sign off on my condo and I won't own it anymore. So I'm making moves now because I think that I actually will sell my condo, which is great. It's just been 6 attempts and 5 different buyers. So I just haven't been trying to count my eggs before they hatch. But I think getting that 15% personal loan will be better. Like getting that out of the way would be better in the long run. Anyways, thank you, Jetta, Omega Werewolf X, Abdullah, and In My Opinion. I really appreciate you all being members. YouTube is running a special where if for every person that becomes a member between now and September 5th, they will pay me a bonus $13. So I really appreciate you for doing that. I just recorded me making a dessert last night, and I have figuring out some math videos, and it's just off-brand, not quite personal finance things that are going on. So thank you for being members, and I hope that you're enjoying these bonus videos. And then today on Financial Philharmonics, we have the money game. It's a tango, and I think it's interesting. It's just like, I heard someone say we're all playing the money game, whether we know about it or not, and the wealthy know how to play the game and they know the rules. So that's what that tango song is about. Anyways, also for YieldMight, I also added some funds today to my upcoming ones. So we should be able to see like AMDU and PLT. So the next time that SLTY and PLT have their distributions, they should wind up in proper, YieldMight proper. But this weekend I'll try to go through, because some of these are not new. They do have distributions, so as soon as I record the distributions, they should be in YieldMight proper. And so if you want to also, if you say you have like $10,000, and I usually just go by the theme over here on the left-hand side and say crypto, because to me, MST and Bitcoin, everything is pretty much the same. But if you just want to go with Bitcoin, you can just click on Bitcoin in the select underlyings filter, and you can see that there's YBTC and XBTY and BCCC and YBIT and BITO and all of these other ones. So that's how you can do that in the investment amount section. And then you can also go to compare funds, and instead of doing the filter by theme, you can do it by underlying and click on Bitcoin. And so you can see that XBTY has the highest distribution payments, followed by YBIT and BITO, YBTC, and then BCCC. So there's not one strategy that's the best for literally everyone. It just depends on what your goals are and what your risk tolerance is. So which is your favorite? And I'll talk to y'all later. Bye.